Hi, everybody. It's Clayton Smith here, and I have with me today Dave Dubeau. Dave is the author of Money Partner Formula, and you can see a copy in the back there behind Dave. Dave has also written numerous books, mainly on real estate and capital raising. He teaches folks now about how to raise capital for their own projects, and he has his own podcast as well, which is the Property Profits Podcast. That's a tongue twister, but it's a good one. So, Dave, I just wanted to start off with you. Welcome to the show, first of all, by the way. Pleasure to have you here.
Well, Clayton, thanks very much for inviting me.
All right, so let's start off with you and a little bit of your background. How you got started in the whole entrepreneurial journey? You were just born one day and you just knew that you were going to be an entrepreneur, or did you stumble into this, or how did you get started? Let's start off there.
I started off as a poor white boy, wetback, illegal alien, starting a business in Latin America.
That's I would not have expected.
No, you wouldn't expect that. No, I was definitely not born into being an entrepreneur. My mother was a school teacher. My father was a heavy-duty equipment operator. Both were union folks. But yeah, I started... When I got out of university, I had absolutely no clue what I wanted to do when I grew up. Started traveling around, spent quite a bit of time in Latin America, ended up landing down in San Jose, Costa Rica, fell in love with the country, fell in love with a specific person down there, decided to plant my flag, so to speak. And like I say, there I was. I was pretty much broke. I think I had about $1,000 to my name. I was trying to figure out what I was going to do. I was working illegally as an English teacher and eventually started my own English language training company down in Costa Rica. Did that for 10 years, got married, had kids down there, the whole bit. And that's how I started my entrepreneurial journey, was in the language business. I taught people how to speak English gooder.
All right. And so you're not in Costa Rica anymore, obviously. You're back here in Canada now.
I am. I have been since 2003. So at that time, my then wife, Costa Rican wife, and myself decided Canada was a better place to raise our kids. Our daughter was getting towards kindergarten age. So we packed everything up, lock, stock, and barrel, moved to the beautiful Okanagan area of Canada near a town called Kamloops, and had to start all over again from scratch at that point, Clayton. And that's when I saw one of those late night infomercials. You know, one of those American gurus that came on TV and said, you too can get rich in real estate with little or no money down. I said, perfect. That's what I got. Little or no money. Show me how to do it, American guy. And so I set away for the course, got it, put it to use. And long story short, did 18 deals in 18 months in Kamloops. And that's how I got started in real estate investing.
Okay, awesome. Now, with the book that you have here, Money Partner Formula. Now, you said you did 18 deals to get yourself started. Was that all with your own, just on your own, Mr. Lone Wolf, Dave Dubeau?
Yeah. Those were all creative, wonky, low money, no money down type deals, like rent-own deals, assignments, lease options, basically taking people's properties over for $1, all those kind of wonky things that you see on TV and go, there's no way that could work. They actually do. They do work. They could work in Canada. You just have to find people in really kind of desperate situations that are open to creative type strategies. So yeah, it was good. It sounds very exciting. 18 deals in 18 months. Only a couple of those were really good deals, like really profitable deals. Most of them were little crappy little mobile homes and mobile home parks where I'd make $3, $4, $5 here, a couple of grand there. A few of them were pretty good, 30, 40,000, that sort of thing. But it was limited. And that's when I kind of clued in, hey, you know what? These creative things are fine, but there's a lot to be said to being able to go in and purchase a property and actually hold on to it long term instead of trying to flip it around quickly.
So your goal at that point was to start to acquire a rental portfolio then, would you say?
Well, I didn't clue in that quickly, so I started off doing rent-own type deals, but I was doing what was called tenant first or client first rent-own. So we'd find a really good tenant buyer. I would go out house shopping with them, And then with an investor partner, I would buy the house for them and lease option it to them for the next 2 to 3 to 4 years while they got their credit in order and could qualify to purchase the house from us down the road. So did that for a few years, and then got out of that and eventually got into multifamily properties, raising capital for apartment buildings and that sort of thing. So these days, I figured out a while ago, Clayton, I'm a better marketer than I am a real estate investor. I kind of suck at dealing with tenants and toilets. I don't really want to have anything to do with that. So these days, I focus primarily on helping other real estate investors to raise private capital. And from time to time, I'm a passive investor in some of my clients' deals as well.
Okay, well, that brings us to the raising capital portion, which I think a lot of people would be interested in. How did you get started raising capital? Was there a particular deal that that kind of forced you into it? How did you get started in it?
Yeah, well, thanks for bringing up painful memories, Clayton. I really appreciate that, buddy. Yeah.
You're welcome.
Yeah, I sucked wind at raising capital at the beginning because I listened to the gurus, and the gurus I listened to said, hey, you know what, Dave, you find a good deal and the money will magically fall out of the sky and find you. I don't know if you ever heard that term. Find a good deal, the money will find you. Yeah, well, it's not quite how it worked for me, at least, Clayton. So I knew it wasn't going to magically fall out of the sky, but I did procrastinate, and I waited. That was when I was doing those client-first rent-own deals. So I was able to self-finance my first couple of those. And then after that, I ran out of cash, ran out of credit, the usual story, right? And I remember I had the perfect tenant buyers in place, went and found them a nice house. We needed $85,000 to purchase this property. I got it under contract. I had 2 weeks to come up with the cash to close on the deal. And that's when I started looking for money. And I remember listening to the gurus, and they said, hey, if you need to raise money quickly, turn every conversation into a real estate conversation, go out and network and schmooze. So I tried that. BNI, Toastmasters, Chamber of Commerce, wherever they'd let me in the door. There I went with my business cards and my well-polished 30-second commercial, and I raised Zippo. Because, I mean, who the hell is going to invest $85,000 with a complete stranger they just met at a Chamber of Commerce event? It's in 2 weeks, right? That's not very realistic. But I was in La La Land. I was listening to the gurus. So that didn't work, but I wasted some time with that. Then, I'd also heard, hey, pick up the phone and start dialing for dollars. Just call people up and pitch them your deal. So that was a painful couple of days of massive rejection doing that. And then, I thought, hey, if enough people see this deal, it's such a great opportunity, it's going to sell itself. So I spammed everybody I knew with my deal, and all I did was tick off a lot of people that could have become good investors. And at the end of the day, had to renege on that deal. I had to back out of it. I ticked off my tenant buyers big time because they'd already given notice where they were renting because they were counting on this, right? Had to return. I think they gave me like a $15,000 upfront option fee. Well, obviously I had to give them back all of their money. So ticked them off, ticked off the seller, because I tied up their property for a couple of weeks, ticked off my realtor, their realtor. I live in a small town. I had some egg on my face for a while. So that was my first experience with raising capital, or should I say not raising capital. And after I licked my wounds for a while there, Clayton, I said, hey, dum-dum, there's got to be a better way to do this. You know a thing or two about marketing. Why don't you apply some intelligent marketing strategies to this whole raising capital thing? So by hook and by crook, I came up with our process. I now call it the name of the book, the Money Partner Formula. And since then, myself personally, when I was doing those single-family homes, back when they were a lot cheaper, I raised just under $1 million for single-family homes with investor partners, then got into the multifamily space, raised several millions of dollars for those kind of deals, and started helping other people about, almost a dozen years ago now. And collectively, our clients have raised well over $350 million cumulatively for their deals, kind of following this process.
Okay, that's a pretty impressive number. Now, for people that want to get started in raising capital, what's the having had your experience now and going through and ticking off a bunch of people, going back in time now, if you could change something or if you could advise younger Dave what to do and how to start, what's one of the first pieces of advice you'd give him?
Well, I'd take a page from Confucius who says, dig your well before you're thirsty, right? So I would say get some investors lined up first, then go looking for the deals, because it just makes life so much more pleasant, less stressful, knowing that you got the cash to back you up. So that would be advice number one. Advice number two, I did do some things right when I was trying to, took my first kick of the can for raising capital. One thing I did that was smart was I created a target group of people that I want to focus on as my investor prospects. So after I fumbled around with networking and schmoozing and all that kind of stuff and it didn't work, then I put together a list of about 200 people that I had a pre-existing relationship with. They knew me, I knew them, but the dumb thing I did was I spammed them my deal right off the get-go. So, creating that list is good, but what you want to do, Clayton, is you kind of want to warm them up first before you start talking business, right? So that was the other big lesson. Warm them up, reconnect with people. You can do this. You can automate a lot of this stuff with email automations and whatnot, but have a personal connection first before you start talking about real estate. And then the other kind of big takeaways, these are just big generalities, obviously, is the mistake I made was I was trying to directly raise capital for a specific deal, right? So I was spamming people about this deal. I was calling people about this deal. It's like a specific deal. What I've learned is it's way better to get people engaged, use marketing to create curiosity about what you're up to with real estate investing, get people to raise their hand in the sense that they book a call with you to find out more, and then walk them through a presentation in general about what you're up to with real estate investing, not necessarily a specific deal, but kind of in general what you're up to. And then the way I like to do it is I like to get people to commit or get off the pot. So if I meet with somebody about investing, at the end of that investor meeting, I want one of two things to happen. Either for them to tell me, you know what, Dave, thanks, but no thanks. Not a good fit for me at this time, in which case, no problem. I don't worry about it. Or the next thing is, yeah, Dave, I'm interested. I want to see what the next steps are. And I get them to do what I call a warm commitment. And that is to sign off on something like an expression of interest or a letter of intent. So my whole goal is use the marketing to create curiosity, to get people to book a meeting with me instead of me chasing after them. And then the purpose of the meeting is to get people signed off on an expression of interest. I want a number of people who have committed like that. And when I've got more than enough capital for my next deal, then I go looking and making offers on properties. Okay. And then
you're kind of creating a pool of investors, that sort of.
Yeah, that's a dangerous word.
Yes.
So securities guys, no, I'm not creating a pool of investors. But yeah, that's the
proverbial pool. Maybe say
a group of people that I can go to when I've got a deal and give them first dibs. So I'm not starting from scratch. So the other thing is, the really successful clients that we work with are doing two things consistently, Clayton. Number one, they're looking at deals, they're looking at properties, so they got deal flow. And number two, they're talking to prospective investors, because it's not something you're necessarily going to want to stop, especially if you're looking at scaling your portfolio. You always want to be looking at deals, and you want to be consistently talking with investor prospects to make sure you got the capital that you need when you need it.
All right. Now, the other thing is now too, it just kind of came to mind as we were talking about pool and having to be careful with securities regulations and things like that. That's something that obviously is top of mind for you as you're raising private equity. What are some of the things, just on a very broad sense, that people should keep in mind when they're raising capital? Because they could that are new to this could really get into some serious trouble if they don't really follow some rules. So what are some general guidelines that you could recommend for people?
Yeah, so I'm going to cover my butt here and say I'm not a lawyer, nor am I a securities expert. I'm a real estate guy and a marketer, and I'm sharing my understanding of how things works. And
very good.
The thing about Canada is, being facetious there, each province has its own securities regulator. They all have similar but slightly different rules, so you kind of have to know how it works in your local area, right? But here's my understanding of it, Clayton. We have to be careful not to be seen as soliciting funds from the general public, okay? Unless you're licensed to do so, unless you're set up with offering memorandums and all of these kind of things, which tend to be very cumbersome and expensive and time-consuming, a lot of red tape.
Mm-hmm.
So you have to be very, very careful. So big mistake I see a lot of newbie capital raisers making, and a lot of people who should know a hell of a lot better, including some gurus, is that they're posting all over social media about their deals and, hey, book a call if you'd like to talk about being an investor, right? So they're soliciting investors on a very public platform like Facebook, like Instagram, like LinkedIn, etc. And they get away with it until they don't. And then when they get caught, it's going to be a very, very painful wake-up call for them. In fact, I'm aware of one guru right now who's just going through the ringer with the securities, Ontario Securities, because that's exactly what he did. He was soliciting online for investors. He got caught, and now he's paying the consequences. So here's the thing. You know, you and I, as a mom-and-pop real estate investor, if securities comes down on us, whether we're in the right or the wrong, we have to lawyer up to defend ourselves. And lawyering up with a security specialist type lawyer is probably going to cost you $400 or $500 an hour for their time. So whether you win or lose, you definitely lose. And the securities guys are paid government bureaucrats who this is their job, right?
Right.
And they probably get bonuses for bringing people down. So they've got all the time in the world to go after you, and you've got to lawyer up to defend yourself. So you got to be really, really careful about that. So here's my understanding. Big caveat, right? There's an area in there that we can play in. So generally speaking, we are allowed to bring on joint venture partners, right, with our real estate deals if those people are close friends, family members, or business associates. The gray area there is what classifies somebody as close, right? So that's open to a little bit of interpretation there, but that's the area that I'm going to suggest you, if you want to be safe, that you focus on first when it comes to raising capital. And the other reason is, Clayton, because quite frankly, if you're just getting started with raising capital, who the heck else is going to invest with you, right? I mean, if you don't have any track record of getting investors a return on their money, if you don't have any proof of concept for doing that, who else is going to give you the chance? You're going to have to work with somebody that you have that pre-existing relationship with. It's just the only logical place to go. So that's why I always recommend to our clients, hey, start off with your sphere of influence first. And quite frankly, you know, chances are you've got somewhere between $1 and $3 million of capital in there already. And that's just the fastest, easiest, and safest place to go fishing in the first place.
Okay. Really good. And so once you've done that, once you've kind of identified that group of people in your sphere, what are some of the steps now that you do to say, as you said before, to kind of warm them up? You don't want to just start spamming everybody that you know with a deal and by saying, hey, I may have these deals in the future. Are you interested in investing with me?
Yeah.
What do you say when you get to that step?
Yeah, well, that's a good question, Clayton. What we do for our clients is what I call a connection resurrection campaign. Because some of these connections, you probably haven't heard from you in 3, 4, 5, 10 years. I remember when I did that first little exercise, I had one guy reach out to me and said, Dave, I haven't heard from you in 18 years, dude. And here the first thing is you're hitting me up for cash. You don't want to do that. So here's what we do instead. We do this connection resurrection campaign. And it's 3 little emails that we send out, let's say a Monday, a Wednesday, a Friday of a specific week. And the first 2 emails are really just warm and fuzzy. You know, hey, it's Dave. Chances are it's been a while since we connected. Just wanted to reach out, see how you're doing, find out what's going on in your life. As far as what's going on in mine, here's what's happening. Here's what's happening in the family. Here's what's happening with work. Here's what's been going on. Here's the good stuff, the not so good stuff. Here's what I like to do for fun. Here's, you know, that kind of thing, right? And then at the end of that, those first couple of messages, like, hey, enough about me. How about you? How are you doing? What's going on in your life? Please hit reply to this email. I would love to reconnect. Okay. So you send that out to however many people you got in your sphere of influence that you've created this list of. Let's say it's 100 or 200 people. And then the trick there, Clayton, is to make sure that when people reply, that you acknowledge their reply. So if I send you this message and you respond back, hey, Dave, thanks. Great to hear from you. Yeah, here's what I've been up to. Then I want to make sure that I reply back, hey, Clayton, glad to hear that everything's going well. Glad to hear that everything's good with the family and business. Thanks for connecting. Let's stay in touch. Okay. So that's the first couple of messages. And then the crickets. What's that?
Avoid the crickets when they reply. You just you want to make sure that you acknowledge them, of course, because you don't want this newly warmed up relationship just to go cold.
Exactly. Well, that is the warm up is that actual connection, that acknowledgement, right? And there's capital in those reconnections. There really is. So very, very important. And then the third message that goes out, I call this the transition message, because we're going to transition people from just like the warm and fuzzy, get to meet Clayton again kind of messaging to, hey, great reconnecting with you. I want to let you know that moving ahead, I'm going to do a better job of staying in touch, let you know what I'm up to with real estate investing. Real estate's something that I'm really, really passionate about. I've been doing this for a long time. I think real estate's the best way for everyday folks like you and like myself to get an above average return on our money. And it's backed by something real and solid and tangible and in demand. And that is rental properties. And hey, who knows? Maybe sometime in the future, you might even want to partner with me and share in the profits on a deal. But if you'd rather not hear about it, go ahead, click unsubscribe at the bottom of any of my emails. You'll be taken off my list immediately. I might be snivelly for a little while, but eventually I'll get over it. All right. And again, if you haven't had a chance to get back to me and let me know how you're doing, please, please, please hit reply. Let's connect. Take care. Talk to you soon. Send that one. So between those three messages, and especially that third message where we're giving people a heads up, now we've kind of tied a bow around this. Now we can start with the marketing messages going out on a regular basis. Does that make sense, Glenn?
Yeah, it does. So you've kind of warmed up, reset in some ways, maybe some older relationships, and probably post-COVID, post-pandemic here, it's probably a good time to start doing that anyways, because we realize that, hey, maybe there are some lost connections that we've missed and probably should rewarm those relationships up anyway.
Yeah.
So once you've done that, you've gone through that process of kind of rewarming things and preparing everybody for the heads up. And then you start some marketing. What does some of that look like?
Yeah, it really depends on where your strengths lie. So when we're working with clients, we're pretty robust about this. So we're looking for at least a weekly touch between them and our clients and their contact lists. So for example, the first week of the month, electronic newsletter goes out. The second week of the month, it's a blog article. I know you're getting into doing a lot of newsletter and blog type articles and whatnot. So that's really good. Third week of the month, it's a video log. Fourth week of the month, maybe it's another blog article. And then the important thing with all of these communications, Clayton, is that we keep them edutaining. Edutaining, okay? Because a big mistake a lot of us make is we assume that everybody and all of our contacts are real estate nerds like we are. And they aren't. They're normal human beings, right? They are. Well, it's true. I hate to break it to you. So we got to keep that in mind and realize that most people do not want a ton of education dumped on their lap. They didn't sign up for that. So we want to educate them a little bit and hopefully entertain them a little bit as well to keep them engaged. Now, you don't have to learn how to juggle or yodel or, ride a unicycle or anything like that to entertain people. By entertaining, I mean, probably tell some sort of a story or an example to illustrate your point. So, you don't have to learn humor or anything like that, but just keep it kind of enticing and interesting for the other person. So that's the big trick, is tell a story, show an example, ideally from your own experience or your own portfolio, to illustrate the point that you're teaching people.
And with some of the touch points, the weekly content that you're putting out to people, it could be a blog, like you say. What are some ideas aside from just a past how a past deal went. What are some ideas for content that you would have in a weekly newsletter or a weekly touch point, we can call it?
Oh, wow. Yeah, no, there's so much stuff. I mean, we were talking a little bit off camera, Clayton, about the Chat GPT and how it's our best bud. So yeah, you could brainstorm up a storm with Chat GPT. You got to be careful not to just regurgitate what it tells you, but you can use it. You can use it to come up with topic ideas. But here's a big trick that I like to do, and we do this with our clients, is I like to batch things up. So for example, if we're going to do videos or video logs, instead of trying to come up with one video every month, what we do is we sit down for a couple of hours once and crank out 6 or 9 or 12 videos so that we can set them and forget them. We can just kind of schedule these to go out, and we don't have to think about it for another 6, 9, or 12 months. They're just going to go out on autopilot. And the easiest way to do that is to come up with like a big global topic that can have a bunch of little subtopics around it. So I'll give you an example of this, Clayton. Well, remind me, what kind of real estate investing are you focusing on primarily these days? Single family, or what?
Some single family and looking at development, longer term
development. Okay, so for example, let's say you're looking at development and you're going to, development, you could have lots of different topics there. But let's say you're doing development for build to rent. Like you're going to build it, hold it, and rent it out. I don't know if that's what you're going to do, but let's say that's what it was good. Then you could look at creating a series of videos or content about how the money is made in build to rent properties, right? And there you can, I mean, there's so many different ways. So I haven't done this, but I've got clients that are doing build to rent development. So I'm pretty familiar with it. So there's, first of all, there's the 3 different lifts you can get in the development process. Maybe there's more, but I'm aware of 3, right? So I believe the first lift is when you're getting the property rezoned, right? So you buy the land, then you get it rezoned. Well, that's one way that you're creating value for you and your investor partners. Always tie your investor partners in there, right? The second lift is when you take it from rezoning and you get into the planning phase, if I'm not mistaken, right? Okay, so you get it kind of shovel ready. And then the third stage of development is actually building whatever it is that you're going to be building on there, creating the property itself. So each one is a different lift. And then once you've got it built, then you've got a variety of different profit centers that you have by having one of these, long-term buy and hold type properties. So cash flow, mortgage pay down, leverage with the bank, depreciation, market appreciation, forced appreciation, all of the different profit centers that you get with long-term buy and hold. You can do a different piece of content on each one of those. Don't try and do one big long thing that explains all of it. It's overwhelming. But if you chop it down into chunks, well, now you've got whatever that is, comes out to. There's 8 profit centers plus 3 lifts. So that could be 11 pieces of content right there that you've got, right?
Oh, wow.
And then, right, you create the videos, you get the transcript from that. You can spin that into articles. You can spin that into social media posts. You can spin that into all sorts of different stuff.
Very good. Now, once you put those newsletters out, what kind of response are you looking for? And then what do you do if somebody says hey, they stick their hand up and say, I'm interested?
Well, that's the goal. So first of all, we got to tell them specifically and overtly exactly what we want them to do. Never assume somebody's going to just figure it out, right? Now, again, be careful. I'm not talking about social media stuff here. I'm talking about if you've created a list of people that you have in your sphere of influence and you're directly marketing to them. So in that case, I would have a very, very clear call to action. It's like, hey, if you'd like to find out how this can work for you, book a call, book a call, book a call. Big link to book a call on my calendar, right? So people say, Dave, how are you getting people reaching out to you, booking calls on your calendar? I tell them to over and over and over again. And eventually some of them listen, right? So that's the trick. It's that consistency. So you're showing up every week in their inbox. You're giving a little piece of edutaining content, and you're telling them if you want to find out more and see how it can work for them, book a call, book a call, book a call. Does that make sense, Clayton?
Beautiful. Excellent. Well, Dave, just another thing before we wrap up here is a lot of the experience you've had and a lot of the strategies you've used have been applied to real estate.
Yeah.
Do you have any clients or do you have any thoughts on people applying this to other business segments like startups or buying existing businesses?
Oh, for sure. I mean, it's the same thing. It's marketing 101. It's not rocket science. I just specifically apply this and work with real estate entrepreneurs because that's who I'm most familiar with. And quite frankly, I just want to focus on one niche. I don't want to try to be everything to everybody. I want to be the number one capital raising resource for real estate entrepreneurs.
All right. Excellent. Well, Dave, I know that our time here is short, so I think that's a good point to wrap things up. For anybody that wants to get in touch with you and find out a little more on the capital raising process and some questions that they might have that they want to explore further, what's the best way for people to get in touch with you?
Well, just go check out my website. It's called moneypartnerformula.com. Again, moneypartnerformula.com. You can get a free PDF copy of the book there. You can listen to the podcast. You can apply to be a guest on the show. You can book a call so we can have a conversation, do what I call a capital strategy and structure call, help you get a little bit of clarity about what it is that you're looking to do with raising capital. It's all at moneypartnerformula.com.
Okay, very good. Dave, it's been a pleasure. Thank you for being on the show today.
My pleasure. Thanks for having me, Clayton.
All right. Thanks, everybody, for watching. Hope you enjoyed this and found it useful. Look forward to seeing you on the next one. In the meantime, take care and bye for now.